Thanks again for the support. I'm just going to give my personal take on where I think interest rates are going. Now, again, this is not financial advice, disclaimer. This is my opinion. You can take it or leave it. I really don't care. What I'm going to show here is I'm going to show some clips from the Governor of the Reserve Bank of Canada. There's a clip at the end of the movie. I want you to stay to watch the end as well. Just it's a really good quote from a movie. Again, I'm not trying to make money out of these earlier videos. It's more to just get some attention to my channel, get some subscribers and some traction going within my channel. So I'm going to start with the RBA interest rate chart. So the Australian, you can see the direction interest rates have been headed here, policy interest rates. You can go into these charts, you can see, compare the US, the Euro area, Japan, places like that. You can see what's happened with interest rates, and you can see where we raised rates, that slowed the economy down. And that was when we had our mid-cycle slowdown, and now we're boom times again. Now, while I've got this chart up right here, I will say that the difference with Japan and why the Japan example of negative interest rates doesn't apply so much is that Japan has a very strong nationalistic immigration policy. So unlike America, Canada, and many other places in the world, we import a lot of people. We have immigrants, like skilled migration, and that is why we won't end up in a Japanese style deflation for decades, is my 2 cents on that. So if you're going to compare it to Japan, Japan is a bad example. What I believe is a good example, and I will take you over now to my Instagram page. So it's 777 Gold Member 777. Now you scroll way down the bottom and you can see how far back I had this posted on my page. This is the Swedish, Sweden policy rate. You can see that interest rates going down, and you can see the national, what happened to house prices there. So this is what I've been forecasting since January 28th is when I put this up. There's only a very recent Instagram account I've created due to someone wanting to have me in one of their books they're doing. Anyway, just showing you how far back I was talking about this sort of stuff. We'll go back over this interest rate page again. So Australian cash, you can see the direction interest rates are going. Now, the talk at the moment with the RBA and the general reserve banks around the world, they're throwing words out there like yield curve control. Now, what yield curve control? The yield curve is the spread between the 10 and the 30-year Treasury, and basically interest rates, whether it's flat or it's inverted, or they generally want to keep it as flat as possible for as long as possible. If the short end of the yield curve falls, the long end has to rise, and the reverse is true. So if the short end rises, the long end should fall. And what you really don't want is you don't want an inverted yield curve. So what I'm seeing, what I'm hearing in the market at the moment, the way the market's speaking to me with this yield curve control, they keep talking about yield curve control, and I believe what we're going to see is we're going to see a short-term spike in rates in Australia and all over the world. And what is going to happen is Australians and everyone are going to get scared, and they're going to fix their interest rates at 2 and 3%. And then what's going to happen not long after that is, again, this is a prediction, not financial advice, take it or leave it. Then I believe we're going to send rates negative. So people that fix that 2, 3, 4%, whatever, for 5, 10 years and think they got a great deal, interest rates then go to -5 at the RBA. Maybe you get a -2, -3 interest rate, so then you end up paying a net rate of like 7% interest on your mortgage. So this is just my opinion. This is just what I am hearing in the market. Now I have a way to predict interest rates going out to a little bit over 2 years, and I'm not going to share that on my channel, and I'm probably never going to share that on my channel because the information is simply too good, and I should be charging money for the information. Now, I share that with 1 or 2 people that I know, and they're involved in my field in real estate. So I will not share that bit of information on my channel. I don't know, maybe down the track I will, but at the moment I'm not going to share it. I'm just sharing my 2 cents on what I think interest rates are going to do. I think rates are going to rise in the short run. I think they're going to rise in proportion to the levels of the debt. So we're not going to see 17, 18, 20% interest rates, because basically the entire world is financed. You're talking governments, pensions, infrastructure. Everyone is financed on these low rates. So even a 3% rise, you're basically talking, you're bankrupting the entire world. So when the RBA says yield curve control, what they really mean is the yield curve is going to do whatever the fuck we say it's going to do, which in layman's terms means we're going to buy as many bonds, as many mortgage-backed securities as we can get our hands on to keep that yield curve where we want it to be. We're going to fix it. We're basically going to fix the market at 0% or negative interest rates is what I'm seeing happening. And I believe there's going to be an initial shakeout and people are going to get offered 2, 3, 4% fixed rates for 5 years, and they're going to think that is a great deal. And then once the banks, this is again my opinion, once the banks lure these customers in, they lock in those good fat long-term profits, then I think we're going to see interest rates set negative, and I think they're going to go between -3 and -5 at the RBA, which will end up meaning you might end up at a 0 or a -2% interest rate. Now the money can still be made there because of the spread. The RBA is loaning at -5, you're paying -2, they're still making 3%. But if you lock in at 4%, then you're potentially paying like 7 or 8% interest rate on your loan for 5 years. And not only that, you lose your flexibility of being able to sell, draw equity, anything like that. And then you're really at the mercy of the market. So what I'm doing at the moment, I'm remaining variable because I believe the banks are sending a false signal to the market. The banks are trying to scare people to fix before we take rates negative. Now, as you can see back on this chart over here, you can see what happened when rates went negative and what happened to house prices. So it is called an inverse correlation. So rates going up, house prices fall. Rates going down, house prices rise. That's an inverse correlation is what that's called. So I'm just putting in my 2 cents here. You can see even here the directions. We're already the real cash rate. We're in negative territory already there. You can just see that. So again, you can see where the direction of interest rates is going. Look at Switzerland. I mean, that's where all the money is in Switzerland. These are the areas we're headed to. I don't believe we're ever going to win. Not for a long time anyway. Not until the next reset, quotation marks, so to speak, are we going to end up here. China, forget about China. China is an absolute disaster. Financially speaking, I'm not even going to go into it. So there's the 10-year bond yield. So basically the interest rates are determined between the 10 and the 30-year treasury or government bond, the multiplier between the two, and then basically the yield curve is determined from that. So that's how that works. So what I'm seeing is I'm going to see this rate. I believe that the RBA themselves are going to go to -3 to -5 at some point. Now, you have heard in the media that they have been saying they're trying to rewrite their computer systems because their computer systems haven't been written to function with negative interest rates. Now that has been said in the media multiple times last year. So anyone that knows me personally knows I've been talking about this for probably close to 2 years. Obviously this is a new channel, so you have to take me at my word for that. Maybe anyone that knows me could put a comment under this video saying, yes, Wes was saying this up to 2 years ago. Now I'm going to play a couple of clips here. Stay to the end because there's a fun clip at the end from the movie The Gambler. It's one of my favourite clips in a movie, and a message in life is you've got to be a bit of a gambler in life to get ahead. Again, not financial advice, disclaimer. I'm someone with a lot of money on the line here. I'm not particularly worried about interest rates. I'm not looking to fix anytime soon. I see no urgency to fix. I believe it's like a bear trap, a bull trap, whatever you like to call it. And I believe we're going to head negative. We're going to have a short-term rise, and then we're going to head negative. The reason we're going to head negative is because we basically have to, because the entire world is dependent on these low rates, and they're going to buy as many mortgage-backed securities, as many 30-year treasuries, as many 10-year treasuries as they have to do to flatten that yield curve or get it basically zero forever. CPI in Australia, we can all see prices rising. Everyone is able to see prices are going up. Most of that is going to be tied to the stimulus from COVID and that sort of thing. Right here, this is the current CPI in Australia. Most significant price rise was from fuel. Everyone feels that, including me. I had some other tabs I was meant to talk about, so I'm sort of tacking this on at the end. So the Germany hyperinflation, this is the kind of thing that I'm expecting to take place. So long-term stimulus, when they put wartime level stimulus into the market at low to negative rates, this is the outcome that eventually is going to happen in mostly countries that have a high levels of immigration. So that is the key difference between, say, Japan and Australia. Why we won't go into a deflationary spiral till right at the very end of the cycle, and I will do a video on when that is. It's quite some time off. Now, you can see here, this was the roaring 20s. This is the sort of thing I'm expecting with the amount of stimulus coming into the market. So I'm reading a book at the moment. It's 300 Years of Land Cycles, Land Speculation in Western Economies. It's an academic level textbook. Now I'm seeing just the price of vacant land before central banking increasing at a rate of 30x in a matter of 6 months without central banking. That's on a silver standard. So when you say you don't want central banking, you don't want the reserve bank, things like that. There's two sides to that coin. When you have completely unregulated finance, you get that 30 times multiple. You get this sort of a thing happening. Now, I don't think we're going to have this, but I think we're going to have a form of this. And interest rates, they're basically between the RBA, all the reserve banks in the world, they're all between a rock and a hard place. They cannot basically raise rates in any meaningful way, because if they were to raise rates even 1% up here, you're talking the entire world's solvency, pension systems, the infrastructure spending. It bankrupts everything, which is the reason why the banks are being forced between a rock and a hard place. They're still going to make money at negative interest rates. They're still going to make money if we go to -5 and they charge us -2. They're still making 3%. They may even fatten their spreads. They may even leave us at 0. They go to -5. They make 5%. Either way, they're still going to make money at negative interest rates. But if you fix your interest rate at 3, 4, 5%, and then rates go to -3, -4, -5, now I'm fairly confident that's going to happen. You're going to end up paying 7, 8%, and asset values, you're not going to be able to keep up with it. So anyway, I thought I'd add this on at the end. Here's Zimbabwe, so the $100 trillion note. I'm sure everyone's seen what's happened in Zimbabwe. That's one of the worst worst inflations of all time, same sort of thing. Anyway, I thought I'd just add that on at the end there. It was just something I forgot that is important. So I am expecting a version of this Weimar inflation, not as bad, but it is going to be quite, what I believe, quite severe. And as I said, they're in between a rock and a hard place. You imagine prices getting to here and raising interest rates even 1%, what that would do. This curve would nearly go backwards. Okay, so what we're looking to do, what they're going to look to do, and what they have been doing with APRA is they change, rather than raise rates, they change the regulations. So they make it harder to get money and they leave the rates where they are. Now, I actually think that I could spend half an hour talking on that. I won't get into that, but I think you'll see some regulation changes. They were due to loosen. I'm not sure if that's still going to happen. I do not believe we're going to see 3, 4, 5% interest rate rises. I think we're looking at max 2% on the high end of interest rate rise, maybe 3% in this cycle before we go negative. So that would be on the high end, the 3%. Anyway, I just thought I'd add that bit into the video before I play the two clips at the end. Stay for the two clips at the end, particularly the last one. Anyway, thanks for watching.
Our message to Canadians is that interest rates are very low and they're going to be there for a long time. We recognize that Canadian businesses are facing an unusual amount of uncertainty. And so we have been unusually clear about the future path for interest rates. If you've got a mortgage or if you're considering to make a major purchase, or you're a business and you're considering making an investment, you can be confident that interest rates will be low for a long time. And so we have been unusually clear about the future path for interest rates. If you've got a mortgage or if you're considering to make a major purchase, or you're a business and you're considering making an investment, you can be confident that interest rates will be low for a long time.
Well, they fucking weren't supposed to, were they? That was the point. So now, you drink? I don't remember if you drink. Of course, there's drink and drink. I drink, but I haven't been drunk since Reagan was president. I got a DUI, and in jail, I actually fell down and pissed my pants. You don't need to do that twice. I tell you this so you'll know everybody's been there.
Everybody's been there.
Once. If you're there twice, having been there once, I can't help you. You know, I listen to the drunks, and it's like you listen to a fairy story about a fight with a fucking monster, when the actual title of the story is I Can't Handle My Liquor by Mr. Crybaby.
Amen.
I don't know, maybe they got a problem, but fuck them if they do, because I don't. Which leads me to ask, are you pulling this shit just now or forever? I mean, do you have a problem, like some little fucking girl, or some Somali who can't process that there's no food where they live? Or are you just fucked up temporarily because you're temporarily fucking stupid?
Are you long business or short business?
What's the difference? I need to know if you got the fucking brains to walk when it's time to walk. People don't, you know. Ball players that can't play anymore. Assholes trying to maintain a standard of living not possible anymore. A lot of those around. I've seen you be $500,000 up.
Been up $2.5 million.
What do you got on you?
Nothing.
What'd you put away?
Nothing.
You get up $2.5 million. Any asshole in the world knows what to do. You get a house with a 25-year roof, an indestructible Jap economy shitbox. You put the rest into the system at 3 to 5% to pay your taxes, and that's your base. Get me? That's your fortress of fucking solitude. That puts you for the rest of your life at a level of fuck you. Somebody wants you to do something, fuck you. Boss pisses you off, fuck you. Own your house, have a couple bucks in the bank, don't drink. That's all I have to say to anybody at any social level. Did your grandfather take risks?
Yes.
I guarantee he did it from a position of fuck you. A wise man's life is based around fuck you. The United States of America is based on fuck you. You're a king. You have an army, greatest navy in the history of the world? Fuck you, blow me. We'll fuck it up ourselves, which we have done. Beautiful fuck you position, lost forever. King George III looks like a fucking birthday present. This is the grandson of the 17th richest man in California.
Does he drink?
What he wants is money, because he doesn't know when to say, that's it, I'm $2 million ahead, fuck it, fuck you, I have a car and a house and a family, and it's all paid for, fuck you.
I mean, even I did that. Want to stop by and put a blast?
I'll have a beer just like anybody else, thank you.
What kind?
Any kind.
About 37 beers, don't fucking put it on me.
But he did put it on you, miss. You still owe Large 2 places you shouldn't. Why do you want door number 3?
How else do I get out?
Time payment. Sell your sperm. Sell your ass. How the fuck should I know? I am of the universe, and you know what it's worth.
Worth plenty.
If I give you this money and you don't pay me back, there are no rules. You never get to say fuck you to anybody ever. You will get me not just what you owe me from your family, you will get me their accounts so I can have them vacuumed from Russia. You jump off a bridge, you can do it knowing I will kill your entire bloodline. You understand the gravity of your situation.
I understand.
You get up, you get out. 260 is requested.
What's this?
This much money, what's a car? What do you want to be able to say to me?
Fuck you.